Hello everybody, this is the monthly higher time frame analysis for the month of May. Let's just start with the futures markets and we'll have a look at the Forex and then finally at the crypto markets. Now the future markets are most interesting right now of the three markets, and our last pick for a big move is actually a copper. Copper has broken out. Now let's have a look at the monthly bar. This is the monthly bar. It's closing high, big green bar coming out of this consolidation. This consolidation is coming out of another overall bigger consolidation. So we've got a lot of bullish power here vested here in these two patterns, and it's about to get released from $6 for copper to around $20-25. That's our target. So we're just moving here. We've moved nicely. Well, actually this week, this is an S1 pattern. We've moved nicely, broken the consolidation high, and we are now sitting at the all-time high. This is a very important stop run level. So if that falls, we should get a slingshot move similar to what we experienced last year with silver. So let's see how that develops. Actually, the copper chart is driven by the closure of the Strait of Hormuz. Well, let's have a look as a blueprint. Let's have a look what silver did. Silver came out of, we don't see them actually anymore, but these were patterns, one pattern after another pattern. And that's the slingshot move that happened. Once this high or this high got broken and then this high got broken. That's a slingshot move, similar to what we actually can see with copper. But now let's have a look at silver. Silver had this tremendous move up. Is this it, or is there more to come? Actually, when we look at these higher time frames, we actually see that silver is consolidating on a relatively high price level, and it's consolidating on a horizontal line, which is this one here. Actually, what we need for more bullish power to come in, we need a final sell-off, a sell-off that breaks this low here. So I mean, silver has developed nicely this week. It has broken this high, and we're below the $100, very important psychological level. But I don't think the bulls will have enough power to actually move higher and eventually break to a new high. We need another sell-off to shake off the weak bulls, to get the silver chart into strong hands. And well, let's wait for that and see how it develops. I mean, the charts can do anything. If it breaks to a new high without needing this final sell-off, that actually means that the bulls are super strong. But I don't expect this to happen. Now let's have a look at gold. Gold always looked a bit weird, like a two-leg pullback. We see it here, two-leg pullback, and it actually only got revealed now that this is as well. It's an S1 pattern, same as silver on the daily chart, an S1 pattern. And again here, we need a final sell-off to the downside, and re-break the green line. Actually, we don't have to look at platinum and palladium because it's basically exactly the same. Now let's have a look at the US equities. Well, first have a look at energies, because energies obviously are interesting. The Strait of Hormuz is still closed. So over the last month, not much happened, and this month, well, we've got a small bar too. But what we see, it's consolidating on a high level. It's consolidating at the $100 mark for the barrel of crude oil. And just recently, we've seen that price is moving higher. Could this be it? Well, it could. It depends a lot on political decisions and what comes out. But for crude, this is not the end. Crude is just hitting here overhead price resistance. You can see it here. Lots of price action and touches, and it's a psychological number. Once this level falls, we should move quickly higher to 150 and then eventually break to a new all-time high. Now let's have a look at heating oil, because crude is actually lagging. You can see here heating oil is doing better. Heating oil went from 2 to above 4. It has doubled within just a few months, within this quarter. It's still bullish. It comes out of a consolidation, and there's more room to go. Now let's have a look at US equities and then quickly the interest rate futures. So US equities, we got our S1 pattern here. They work beautifully, a series of green bullish bars. I actually don't understand why it's so bullish, why we didn't at least get a 21 touch on the quarterly chart. Well, this chart is driven by AI companies, and well, obviously the AI bullishness is more important than the war with Iran. That's how it looks like. But should we see a break of the AI bull, or we could still get a big pullback? So I'm not fully trusting this, because we didn't get a 21 touch, which is what we always got basically over the last crisis, be it the start of the Ukraine war, or be it the COVID pandemic, or be it the terrorist announcement. The more interesting chart, I think, is the Russells 2000, because we are coming here. Well, we've just broken to a new all-time high, and this is another pattern, right? The more bars a pattern has, the more power is vested, and this, I think, this has a lot of more room to go to the upside. So let's have a look at the interest rate future, and then we're moving to Forex, and then finally crypto. Now, with the interest rate futures, we're stuck here. Let's say it's stuck in this very narrow range. But recently we're seeing some price action to the downside. This move started when the Iran war, like phase 2, started. So we see a little bit pressure on the US yields, right, of this 5-year T-note. So yields are going up. And I think we're seeing much higher yields, because we see some moves. If this low breaks, we're not far anymore, or we should probably test the upper boundary of the range, and then we've got the chance actually to break lower. We're looking at that for over a year now, and there's this opportunity to spike the 200. So we could actually see here that yields are rising. That rise in yields started up here with the start of the Ukraine war. Trump is in China visiting the head of state, and well, let's see what comes out of that. We need some external news events to produce this move to the downside. Okay, let's quickly look at the Forex charts from the higher time frames. We can see here on the monthly chart, not much happening, as we've broken outside of this range. We're basically squeezed between the upper line, defining line of the range, and the 200 moving average, and the big number 120. So we can go in any direction. We have a pattern. Here on the weekly, we've got a bullish S1 pattern, but we did not yet get a touch of 21. So again, I don't know what's going to happen with the euro dollar. It can actually go in both ways. And if it starts to move in one direction, it can produce a big move. Now let's have a look at the yen cross pair, euro yen. Actually, all the yen with any other cross looks very weak. And that's what we see. That's what we see here. It's nicely consolidating, bouncing off the 21 moving average. The more it bounces off, well, the more energy is basically accumulated. And the next move should be a big move to the upside. Now let's have a quick look at the Swissy. So the yen is one of the weakest currencies. The Swiss remains one of the strongest currency. What we see here, there was an S2 break to the downside, and that's just a healthy pullback. And it seems like this is over. We actually have another S2 pattern here. Let's just mark that red. We've got another S2 pattern here. Let's wait for this low to be broken, and that's basically the entry signal short for this S2, and overall it looks beautiful. It should make a big move into more and more Swiss strength. Now the Australian dollar this year is very strong. You see it here against the euro, very strong. Price goes down. We were actually looking for a bounce, and it looks like well, either we get a bounce of this important line, or if we break the line, we could actually see a complete disintegration of this chart. So meaning more Australian dollar strength and lots of euro weakness. So the euro is at a defining moment here. Either bounce or break through. In either way, we could see a big move coming. Now let's have a look at the US yen. It's the most important yen chart against the dollar. We can see here we're still grinding at this very important level. We are close to the all-time high, and we can actually see how there was a consolidation trying to break higher, and then the bulls shied away. So this is a mark, a level, the 160 big number level, that is really important. It has been important, yeah, at these two highs here. Once this level falls, currently we are in a consolidation, a 2-year, more than 2-year long consolidation. If this consolidation falls, we are off for our target much that is much much higher. Now let's have a look. Another Australian dollar cross pair against the pound. So against the pound, the Australian dollar is very strong. It has more selling potential. Down into the green line, spiking the 200 moving average from above. We see here good follow through on the downside, some rest here, another touch, last kiss, and now it's breaking lower. Looks very bearish, the pound odds. So lots of bullishness here for the Australian dollar. Australian dollar cat as well here, bullish against the cat, looks very good, and looks like we're just breaking out this 6-year sideways range. Now we're attacking a very important par level, the one with 4 zeros, and it clusters with this last dominant high. If that high falls, well, there are a couple of other stop on levels. This could make a very big move upwards. So it looks like Australian dollar for this year should do really well. Now let's have a look at the cryptocurrencies. So here's Bitcoin, then we have a quick look at Ethereum. So Bitcoin is still here in this phase of a pullback. We've drawn here a line. This is an S1 pattern. We did not get a rebreak that, but I don't think either that we are already that we have already ended this pull down after this high back here in September of last year. This is still a pullback. How? Well, it's coming back to the 200 moving average. That's what price tends to do. It's coming back to the 21 moving average on the weekly, which is what price tends to do, even test the 200. I think we're going to dive down from here. What gives me a bit of confidence for doing so? Well, because Ethereum, the second biggest crypto coin, actually looks much cleaner for a break lower. That's our S1 pattern. If we re-break this line to the bottom, well, that actually flashes another sell signal here for Ethereum, and we should have another leg lower. Now Bitcoin, a lot of traders investors are actually calling for, well, we should get long, this is over. Well, it's actually not over. I'm a bit surprised that it went like from 75 to 85, but I'm not convinced that this is it. We're just bouncing basically off we're bouncing off the 200 from the weekly, and now we've reached the 200 on the daily. We're basically boxed within those 200 moving averages, and well, we just need enough weak bulls or excited bulls that are FOMOing into Bitcoin in order for this rally to end and have another leg lower into our target area. So not much changed here with Bitcoin and Ethereum. It's still a bearish market. I think we might need another 3 to 6 months to bottom out the crypto market and get back into springtime for cryptos.